What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the technicals that we're seeing on AMC right now. We've been talking about this very key thing that has happened once before, specifically in the June run-up, right before the June run-up, that we are currently seeing again. And I want to show you guys how that is developing. Now, in addition to this, we're also going to be going over a little bit of the Ortex data on AMC and GME. We saw a little bit of an increase in the cost to borrow, the max cost to borrow today on AMC, which is a very interesting thing to see. We also have to go over the options chain data on Stonko Tracker and the max pain that we are seeing going into the end of this week. But there is something that has come out recently, this quarterly report on derivatives exposure, that is absolutely astonishing. When we go through this report, you are going to see the absolutely crazy amount of derivatives that these institutions are holding. These are incredibly risky, and as Warren Buffett has said in the past, derivatives are essentially the ticking time bomb to the next major market event. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you've seen the amount of success that people are having with the 1348 trading strategy that revolves around those 13 and 48 EMA crossovers. We have a lot of really cool things coming for you guys in the future. If you do just want some access to some free alerts, we're alerting you for free on over 150 stocks right now on the 4-hour time frame. Link down in the description for the Discord if you want to check that out. If you really want to take it seriously and get access to all the 20 private live streams, alerts on 400 stocks on the day trades, make sure you check out the premium as well. So what we're looking at here on AMC right now, it kind of changed a little bit. We saw on the stream that it closed a penny in the red. Now we're seeing it a penny in the green. Again, we see a lot of this nonsense start to happen. Not necessarily what we really were hoping to see today, but again, very healthy consolidation, because here is why. We've been looking at this 4-hour chart on AMC for some time. And remember, a couple of weeks ago, I was telling you guys, well, I'm looking for this 13 EMA crossover right here above the 48, the closing candle above the 200, and then I'm going to start to buy some calls. Well, we saw this right here. That price was around $18, $19, and we ran all the way up to 34. So what we're looking at now is kind of an indication of what happened last time in June. So I showed you guys this in the video this weekend, but here's kind of how this is developing here. We are now seeing that healthy consolidation right along this 48 EMA. Yeah, we've come down a little bit below, but overall, we've come right back up to this level. This consolidation that we're seeing right now is a really, really good sign. And to me, it kind of suggests a potential for AMC to be gearing up for another move upward, a pretty substantial one too. But again, I can't really give you a time frame on this or how high this next potential run-up is going to go, but things are looking pretty good for AMC right now. We're also looking for that 4-hour MACD to cross back to the upside. And again, you saw what happened the last time it did this, had some pretty nice candles to the upside. Now, let's talk a little bit about the Ortex data. So let me just refresh this really quick on AMC right here, just so we have the accurate data. We have 100% utilization, which again, I don't necessarily agree with, because we're still seeing not all-time high shares on loan yet. We're currently sitting at about 136.8 million shares on loan. 107 million are estimated to be sold short. 20.79% estimated short interest, 2.86% average cost to borrow, and 14.39% max cost to borrow. When you start to see the max cost to borrow start to step up like that, that's a very good sign. Some of these shares are going out on loan at higher rates. That puts more pressure on shorts trying to get in, and the shorts that are currently in AMC when these cost to borrow rates start to go up, because the vast majority of the time, these cost to borrow rates are variable, meaning that when the rates change, if you have an existing short position that you owe money on, well, you're going to have to pay a higher interest rate. Now, coming over to GameStop too, we've got, again, 100% utilization, 11.38% max cost to borrow, 8.75% average, 21.02% estimated short interest. Again, the numbers on these stocks right now in terms of short interest are looking very, very bullish, because what we're seeing is the shorts aren't really covering their positions or really getting out in any significant way, even though we're trading at higher prices than we were a couple of weeks ago. Now, Coming over here to this Max Payne site right here, we've got Max Payne going into the end of the week at $22 a share. We did end up finishing above Max Payne last week, which was a good thing to see. We haven't really seen any effects of that happening. Again, Max Payne's, I view it as a range, because if you can break out high enough above Max Payne, you start to see a lot of delta hedging. Same thing to the downside as well. The gamma squeezes work in both ways. And again, for those of you guys that don't know by now, Max Payne is the price where the most amount of calls and puts are expiring out of the money, meaning that they are worth $0 on expiration. So it benefits the option sellers who are market makers and institutional investors, and hurts options buyers who are most of the time going to be retail investors on a weekly basis. Now, when we come over and take a look at what's going on Stonko Tracker in terms of how many calls in the money versus puts in the money, for this week, we've got about 22,000 calls in the money with about 14,000 puts in the money. So again, it's more gearing towards a little bit of hedging to the call side, meaning they would be net buyers of shares in order to hedge these options positions, but it's not really enough to cause any significant price movements to the upside at the current time. This can always change. You can see aggressive price movements to the upside, and people start to really pile in on the calls. Now, when we take a look at the actual options chain for AMC, any key levels here, 25 is a decent level over here. Again, 29, 30. We're going to have to see some pretty aggressive movement to the upside to get a lot more of these options in the money. Now, let's get into this situation in which we have a 176 or $177 trillion disaster. So what we're looking at here is the notional amounts of derivatives contracts of the top 25 commercial banks, savings associations, and trust companies in derivatives. This list I've shown you guys before. This is the most updated list that we have. It just recently came out. And we have JP Morgan right here with a total derivatives exposure of $49 trillion. And you can see over here, let's see if they list the swaps over here. Yeah, so the swap list over here is the highest out of any one of these other categories. Now, a lot of people have kind of speculated in the past what these institutions have been doing with their AMC and GME positions. There's a basket swap theory, but swaps are one of the ways that these institutions can kind of hide or try to get out of some of these really over-leveraged short positions. But that's not the most important thing that I want you guys to key in on here. The key thing is Goldman Sachs. Right now, you see this column right here is total assets, total derivatives. So what we're seeing here is that they have about, when we just look at these, if we're not accounting for in millions of dollars, we would see here 434,000. And then we have over there on the right, the total derivatives right here, 47 million. This puts them at about a leverage ratio of 110 to 1. Now, to put this into context for you, Lehman Brothers, right before their collapse in 2008, had a leverage ratio of, guess what, about 35 to 1. That is 3 times what Lehman Brothers' leverage ratio was back in 2008 when they collapsed. So this chart here is kind of a good way to kind of see what these institutions are doing in the derivatives market. Again, some of these positions are very, very lucrative for these big banks. But the fact that some of these institutions are wildly over-leveraged at the current time is a call for concern. If they're holding anything crazy on their balance sheets right now, well, we could end up seeing another Archegos, Melvin, Credit Suisse-like situation over the next couple of quarters. So that is mainly going to wrap up this update on AMC GME in this OTC or this derivatives report that we're looking at from the Office of the Comptroller of the Currency. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.